On December 31st, 2025, President Xi Jinping stood before the Chinese people and declared a triumph. China's economy would reach around 140 trillion yuan, nearly $20 trillion, cementing its position as the world's second-largest economy. A new milestone, he called it. The numbers seemed to confirm what Beijing had been saying all year. Despite global headwinds, China grew at approximately 5%. But what if those numbers weren't real? The impossible economy. According to Rhodium Group, a leading independent research firm specializing in China's economy, there are no examples of economies that have recorded 5% real GDP growth while facing years of persistent deflation. China has experienced exactly that for 10 consecutive quarters. They doubt China is the first. The GDP deflator, the broadest measure of price changes across an entire economy, has been negative for 10 straight quarters. Here's what that means. While Beijing claims the economy grew 5% in real terms, in nominal terms, the actual money changing hands, it grew by less than 4%. Chinese companies produced more but earned less. They sold more products for lower prices. It's called deflation, and it doesn't happen in healthy, fast-growing economies. It happens in economies in distress. I saw many 10 yuan haircut shops. 10 years ago, haircuts were 39 or 59 yuan. Perms were hundreds. Now everything is 10 yuan. Consumption has downgraded. Bloomberg's analysis of 6,000 publicly traded Chinese companies found that more than 25% reported losses in the first half of 2025, the highest share in at least a quarter century. So how can an economy be growing and shrinking at the same time? It can't. The phantom investment. To understand where China's numbers don't add up, you have to follow the investment. Fixed asset investment, the money going into infrastructure, property, and manufacturing, is the backbone of China's growth model. For decades, Beijing built its way to prosperity. But in 2025, something broke. From January through November, fixed asset investment fell 2.6% year on year, the steepest decline since 2020. In the property sector, it collapsed by nearly 16%. Yet in the official national accounts, gross capital formation, the investment component of GDP, was still reported as adding nearly 1 full percentage point to real growth in the third quarter. According to Rhodium Group's research, the National Bureau of Statistics has provided no compelling explanation for this discrepancy. In other words, investment is falling, but somehow still adding to growth. That's not just suspicious, it's a mathematical impossibility. And it's not just investment. Retail sales grew only 1.3% in November, the weakest pace since China ended its zero-COVID lockdowns in December 2022. For an economy that's supposedly rebounding on the back of domestic consumption, that's anemic. Before the holidays, this is usually the time when every household is busy stocking up. But look at the shipping peak season. The market is cold and deserted. This year is finished, completely finished. Youth unemployment stood at 16.9% in November. And that's after Beijing changed the methodology to exclude students from the calculation. Behind that number are graduates competing fiercely for a shrinking pool of stable jobs, especially in government and state-owned enterprises. In some cases, thousands of applicants chase a single opening. I'm 37 years old this year. I'm unemployed. It's almost the end of the year, almost New Year's. I don't have a job. How am I supposed to get through this year? And I still have a 6,000 yen monthly mortgage. The hidden crisis. Perhaps the most dangerous distortion lies hidden in the shadows of local government debt. By the end of 2025, total local government debt, including off-balance sheet borrowing through thousands of local government financing vehicles, reached 134 trillion yuan. That's nearly $19 trillion. For years, local governments funded themselves by selling land to property developers. In 2021, they raised 8.7 trillion yuan this way. By 2025, that figure had collapsed to less than 3 trillion. More than 10% of land parcels offered at auction received no bids at all. Local government financing vehicles, LGFVs, are essentially shell companies created to borrow money on behalf of local governments. They take on debt to build roads, bridges, industrial parks, and often projects that never generate enough cash to repay their loans. On paper, LGFVs reported profits of about 550 billion yuan, but that number hides a crucial detail. They relied on more than 1 trillion yuan in state subsidies and transfers. Without those injections, nearly half of all LGFVs would be in actual loss. The picture that emerges is not one of sustainable development, but of a sprawling, debt-fueled system being kept alive by fiscal life support. We're now in Longshan, Xi, looking for factory buildings. Honestly, it's extremely bleak. If we didn't come out, we wouldn't know how bad things really are. The outside market is a total mess. This afternoon, I looked at 5 factory buildings. Basically, all of them couldn't keep going and shut down, or they couldn't collect payments, or their cash flow broke. Honestly, my mood is very heavy. I don't know how to express it. The alternative calculation. In December 2025, Rhodium Group published what may be the most comprehensive alternative assessment of China's economy ever compiled. Their conclusion: China's economy grew between 2.5 and 3.0% in 2025, not 5%, roughly half the official rate. According to Rhodium Group, by the end of 2025, China's real GDP level is approximately 11% lower than official figures claim. That's the cumulative effect of years of overstatement. Rhodium's method is painstaking but straightforward. They use expenditure-based GDP accounting, the same framework used by the Chinese government, but cross-check every major component with price indices, trade volumes, credit growth, and fiscal data. When they apply that lens backward, a pattern appears. For 2022, when Beijing claimed 3% growth, Rhodium estimated the economy likely contracted. For 2023, official figures reported 5.3% growth. Rhodium's estimate was between 1.5 and 2.0%. For 2024, Beijing again said 5.0%. Rhodium calculated something closer to 2.4 to 2.8%. Year after year, the gap has widened, and always in the same direction: overstatement. Rhodium isn't alone. The Bank of Finland's alternative indicator put China's third quarter growth in 2024 at about 3.5% using one method, far below the official numbers. The Atlantic Council estimated 2024 growth between 3.0 and 4.5% at best, describing China's official figures as new numbers, same overstatement. Across independent institutions, the message is consistent. China is growing, but not nearly as fast as it claims. The trillion-dollar gap. So let's return to President Xi's claim: 140 trillion yuan in GDP for 2025. In December 2025, Beijing revised its 2024 GDP figure downward to 134.81 trillion yuan. On paper, reaching 140 trillion in 2025 would mean nominal growth of about 3.9%. But if the starting point, that 2024 base, was already overstated, then the entire 2025 figure is resting on sand. If China's real GDP level is roughly 11% lower than officially reported, the adjusted 2025 figure isn't 140 trillion yuan. It's closer to 125 trillion yuan, maybe 127 trillion at most. In dollar terms, that's not 19.4 trillion. It's approximately $17.5 trillion, a gap of nearly $2 trillion. For perspective, that gap alone is larger than the entire GDP of India. It's economic output that, according to independent researchers, simply doesn't exist. The cost of deception. The implications extend far beyond China's borders. If domestic demand is weaker than advertised, Chinese manufacturers have to look outward to keep their factories running. In 2025, China's trade surplus surpassed $1 trillion, exceeding the full year 2024 total by November alone. Steel exports reached record levels. Solar panel shipments hit 240 gigawatts. Electric vehicles and batteries continued to pour into foreign markets, growing at roughly 30% a year. Those who supported the Sima family, are you okay now? You shouted every day for foreigners to get out. Now Sony is gone, Samsung is gone, LG is gone, Intel is gone, Philips is gone, Starbucks is gone. They're all gone. You think only foreign companies left? They took away orders for countless small businesses, entire supply chains, and countless jobs for ordinary people. In Shenzhen and Guangdong, unemployment is terrifying. Factories have strange order drops, orders cut in half, severe overcapacity. Many factories are barely surviving. Bosses are becoming debt defaulters. Many won't survive this winter. Why give up a market of 1.4 billion people? Why? By late 2025, the rest of the world was no longer ignoring these distortions. Germany's finance minister publicly warned that Chinese overcapacity in steel, solar, and electric mobility threatened fair competition and German jobs. The IMF began openly describing China's external imbalances as a risk to the global system. France and other G7 nations, well beyond the United States, started naming them as strategic concerns. According to analysts, The difference between China growing at 2% and 5% is roughly $500 billion in demand. The profitability of many Fortune 500 firms hinges on which number is correct. If the numbers are wrong, every strategic calculation built on them is wrong too, from corporate investment plans to government policy. The human cost of statistical manipulation is profound. If Beijing cannot acknowledge the extent of the slowdown, it cannot design policies adequate to address the needs of over 600 million Chinese living on less than $2,000 per year, or meet its promises of market access and reduced imbalances to the international community.
早上去世，下午就落地成盒了。
People die in the morning, by afternoon they're news. Because of exhaustion, overwork, bodies can't take it.
从今天开始，能不买的全部买，衣服鞋包全部买。
From today, minimalist life begins. Buy nothing unnecessary. Wear clothes until they fall apart. Grow hair long to sell. No accessories. One bag only. No drinks or snacks. Only basic food. No hoarding. Extreme frugality. No social spending. No electronics. No more kids.
我今天叫了一个在平台上叫了一个货拉拉。
Today I called a Huolala truck, 63 kilometers for 78 yuan. The driver drove 2 or 3 hours to reach me. I asked him, over 60 kilometers took you 2 or 3 hours? He kept apologizing, afraid of a bad review. He said he got a flat tire on the way. I asked, did you make money on this trip? He didn't say anything. Later he said he spent 30 yuan fixing the tire, 6 yuan on noodles, 12 yuan charging. This trip was basically a loss. Listening to this made my heart hurt. Why is life so hard for people at the bottom? He's the breadwinner of his family. His whole family depends on him. He runs from morning till night. He says at most he earns 200 yuan a day. How are ordinary people supposed to live? I scanned him 200 yuan, but there are too many people like him outside. You can't help them all. Ordinary people, in this era, it's really too hard. The pattern of manipulation. This isn't the first time China's statistics have come under scrutiny. In June 2023, youth unemployment hit a record 21.3%. Beijing's response was not to confront the problem in public, but to suspend publication of the data for 6 months, citing a need to improve methodology. When the data resumed in January 2024, students were excluded from the calculation, mechanically lowering the reported rate. The problem didn't go away. The number did. Wages are too low. Too many unemployed people. Jobs are hard to find. My major is finance. I graduate next June. I want to find a sales or repair job. We just walked around the job fair. How do you feel about the positions? Wages are too low. Everything is either sales, operations, or education. They're all about 3,000, 4,000 yuan. If they don't provide housing after food, there's basically nothing left. What salary do you expect? Above 5,000 at least, enough to survive. Why do you think people take postgraduate exams? I think it's to delay employment. Too many graduates. Jobs are hard to find. If you don't find a job after graduation, what then? Rot. According to Derek Scissors at the American Enterprise Institute, the party is deeply intolerant of visible economic instability, and so everything gets smoothed. Businesses underreport to avoid taxes. Local officials overreport to get promotions. In a downturn, these incentives only intensify. As the economy has weakened, the government has removed or suspended publication of numerous indicators. The Center for Strategic and International Studies noted in August 2025 that China's official statistics suffer from outright falsification alongside unresolved technical flaws. Christopher Better of Gavekal argues that the quality and breadth of U.S. economic statistics are on another planet compared to China's, and that progress in measuring services and household consumption has been minimal in 2 decades. The result is an economy where uncertainty isn't just about the future, it's about the present. Policymakers, investors, and ordinary citizens are all trying to navigate through fog.
现在就业形势有多难？我88年的，上周跟我大学2个同学聚了一下。
How hard is the situation now? I was born in 1988. Last week I met 2 college classmates, 3 middle-aged men, all unemployed. One unemployed for over a year, another since last August. I lost my job last month. After 35, no matter what industry you're in, you'll probably be eliminated. So we joked, is our destination the Ironman triathlon? The road ahead. Tomorrow, as this documentary is being finalized, China's National Bureau of Statistics will announce the official 4th quarter and full year 2025 GDP figures. Economists expect the numbers to show 4th quarter growth around 4.5% year-on-year, the weakest pace in 3 years. bringing full-year growth to Beijing's target of around 5%. The IMF, still working with official figures, forecasts 4.5%. If the pattern of overstatement holds, the real figure is likely closer to 2.5%. Rhodium Group projects China's growth will fall even further in 2026, to between 1.0 and 2.5%. Investment is expected to remain weak or continue contracting. The property market may stabilize modestly, but construction is trending below long-term equilibrium. Household consumption momentum is weak heading into 2026, and the most important swing factor is export performance. For the world's second-largest economy, this isn't a normal cyclical slowdown. It's a fundamental shift. The evidence is comprehensive. Collapsing industrial profits, record-low credit growth, youth unemployment above 16%, retail sales near zero growth, a property sector in freefall, 10 consecutive quarters of deflation, and an investment component that, mathematically, doesn't add up. According to Rhodium Group, the miscalculation of China's economy has been persistent for too long, and always in the same direction of overstatement. That has obscured global imbalances that now threaten systemic risks. 140 trillion yuan, $19.4 trillion. A new milestone, President Xi called it. But if independent researchers are right, and the data strongly suggests they are, China's economy is roughly 13 trillion yuan smaller than Beijing claims. $2 trillion of phantom growth. The question isn't whether China remains a major economic power, it does. The question is whether we can trust the numbers used to measure it. And if we can't trust the numbers, what else are we getting wrong? Make sure you're subscribed, then click here for the next one.